Welcome to ShortView Trading. This is your morning market hit for Thursday, 25th of March. What matters today for traders? Well, price action was once again bearish yesterday across a range of asset prices. For example, look at the dollar, which made a new local high and continues to create headwinds for equities, which generally were lower on the day, with the Dow Jones Global Index, for example, lower on the session and down by about 3% since that bearish key day reversal pattern last Thursday. And elsewhere, have a look at Bitcoin, down 3.6% yesterday, down another 3.5% overnight. And as the chart shows, Bitcoin often leads the direction of US equity markets, especially at key turning points. But while markets generally have been under pressure, it's the reflation trades and the cyclically sensitive assets that have been at the center of the weakness, while the growth areas of the market have remained relatively resilient. Take the Russell, for example, the worst performing of the major indices yesterday, down 3.6% on the session and below its 50-day moving average. While in contrast, if you look at the Nasdaq, it's continued to hold above its key support level at around 12,750. So the key question is, for how long will cyclical parts of the equity market push these indices lower? And linked to that, is there a bounce coming? We address all of that in our daily trading publication. It's available on the website and to subscribers, but we also offer a free trial for 7 trading days. And in that publication, we make a 1 to 2 week trading recommendation, long or short, on US equity futures. And the process really is driven by our short-term models, like this one on your screen now, which is our technical scoring system for the Russell 2000. It generated a sell signal in mid-March. It's now back on strong buy, highlighting the case for a bounce in the cyclical parts of this equity market. Other models are also approaching buy thresholds, like this one, the Russell put to call indicator, showing that traders have been buying puts, protecting themselves to the downside. So fear is elevated, suggesting that this pullback is now long in the tooth. Not all of our short-term models, though, are generating buy signals for equities at this juncture. The US dollar, for example, could rally further and become more overbought in the near term, indeed, as it has in recent months, with further dollar strength, if that happens, potentially consistent with more near-term weakness in equities. So where does that leave us? How are we trading this market? Have a look at our daily trading publication for detail on all of that. And what are we watching today? Well, in terms of macro data, we get the third estimate for Q4 US GDP. We also get the Kansas City Fed manufacturing PMI, and there are a number of key Fed speakers, most notably Williams and Clarida, but also Bostic, Evans and Daly. And we've got Lagarde from the ECB and Bailey from the Bank of England also speaking today. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn and Facebook. Thanks for listening.